A very good morning to our lecturer, Madam Dr. Nohani and my fellow classmates. We are from Group 10. Today, we would like to present on an article entitled State of Nation/Economy Reports Why Malaysian Debt Burden is Still Above 1 trillion. Before that, let me introduce myself. My name is VALENTINA ALFIRA ANAK LINANG from BA2423A. Will present the introduction and the background of an article. Here is my member group.
Assalamualaikum everyone. My name is SHAFIQA binti HALIMI. I'm from BA2423A and today I would like to present about the issues, recommendations and the solutions.
My name is Mohd bin MASRI and today I'm going to present about issues and solutions.
Introduction. This article will present a current issue that happened in Malaysia. The issue will be discussed as well the reason of the debt burden in nation, alongside with the issue that arising on this article and the solution and recommendation for each issue. From the overall article, it stated that Malaysia is facing the debt burden with above 1 trillion at the end of September 2020. So, what is a debt burden? A debt burden means a large amount of the money that one country and an organization owns to another and which find very difficult to repay. From the analysis, the federal government debt and liability increasing and its affect the GDP growth at 7.3%. Meanwhile, according to the World Bank, the largest fiscal deficits can cause increased government borrowing and the federal government debt goes to 60.7% of GDP. There will be effects of GDP when there are huge amount of debt and the liability. So from here, we analyze that the COVID-19 is one of the reasons that affected most to our debt burdens in Malaysia. Next, let's move on to the background of the article. This article is from the Markets, which released on 16 November 2020. From the article, it clearly shows that Malaysians face on issue about the debt burden in year 2020. From here, it's already stated that the federal government debt and liability have been increasing to 1.2569 trillion, and for the GDP is recorded as 87.3% at the end of the September 2020. For the past 3 years, the same issue also have been arising due to the Malaysian debt. But compared to the past 3 years report, the total sum of the debt and liability in year 2020 was the highest record of debt. This is because the direct federal government debt rose up due to the COVID-19. This is where the government needs to take additional debt to fund, which require about 55 million. It also provided Bantuan Prihatin Nasional 2.0 cash aid for vulnerable social groups in society. Besides, the government also extended loans and advances about 9.4 billion to the project financial and debt services. The higher the amount of the debt, the higher the service debt will be charged. In year 2019, it's recorded as 40% from revenue for debt services. Meanwhile, in year 2020, the government estimated about 15.4% for debt services. Therefore, it also stated that about 70% of debt and liability that make up by the direct federal government. That's all from me. I will pass to the next presenter.
There are several issues that has been found in this article. The first issue is where an alternative to taking on more debt would be exploring unconventional monetary policy on top of to be continued taping of the various institutions in the country to boost the government hand in helping to protect life and livelihood affected by the COVID-19 pandemic. These, however, also require adequate safeguards to ensure that a bigger issue is not unleashed.
The second issue in this article is national budget deficit to be narrowed. The narrow national budget deficit is one of the factors that can disturb the country's GDP. The government expects its fiscal deficit to rise to 6% of gross domestic product (GDP) by 2020. This is the largest gap since the global financial crisis in 2009 due to the additional stimulus packages to lift the country's economy out of the darkness plus lower the GDP as a result of the coronavirus outbreak. But the fiscal deficit is likely to narrow slightly in 2021 to 5.4%, with the economy seen to recover between 6.5 to 7.5% and rising revenue next year due to improved domestic and global demand. The budget came as the Malaysian economy has been hit by the pandemic. The trade-dependent economy saw its first contraction in more than 10 years. The coronavirus outbreak slowed businesses and export activities in the country and causing Malaysians' gross domestic product (GDP) to fall by 17.1% in the second quarter of 2020 due to the Movement Control Order (MCO) enforced during the quarter to curb the spread of coronavirus. When the gross domestic product (GDP) falls and unemployment happens, whereby the less the product, the less people being employed. When the employment reduces, the amount of cash in market to buy goods reduces. The third issue in this article is the increase of unemployment in the country. When the national income is financially not good, it will increase the cost of borrowing to businesses. Businesses is more likely to save their money rather than taking loans from banks due to higher interest rate. Malaysians' unemployment rate may be much higher and made worse due to COVID-19 pandemic. Recently, the worsening COVID-19, which triggered a second of the Movement Control Order (MCO) in Malaysia, has once again cast the spotlight on rising unemployment. Uncertainty playing inside businesses, even with the hint of vaccine optimism, and as it is, job prospects for remain jittery. With the expectation of economy recovery soon after massive inoculation can be made with the availability of COVID-19, Malaysia should address the current 764,400 unemployment and possibly around 1 million newcomers to the job market. The pandemic situation that lasts for several months has caused a lot of companies suffer losses. and some have not been able to pay their employees until they had to lay off some of their employees. Now let's move on to the recommendation and justification.
Regarding for the first issue, it is mentioned that externalities such as COVID-19 may lead to great deals of economic instability, and that as a result, current comprehensive monetary policy measures might not be able to bring a complete solution to the consequences. Therefore, it is said that such new steps need to be taken in order to ensure that the same policy measures do not have a negative impact on the situation. In order to resolve the lagging impacts of all policy initiatives on the economy, the solution should be preferred. We can see that changing the consumption habits of the economy through the proper induction of monetary packages will be a significant economic policy measures. It is expected that such intervention will contribute to debt problems. Where better policy measures need to be taken, in this situation, it can be seen that it will be possible to encourage the growth of rural business choices in order to reduce the debt burdens on the economy. It can be seen that if additional monetary packages are placed in place, they can contribute to economic growth, helping to reduce the pressures of the economy. In order to help debt management and revenue generating measures for the economy, the rate of interest and taxation measures could be adjusted in such a way. It could also be shown that under such conditions, the implementations of the above-mentioned economic policy measures could help reduce the debt burdens on the economy.
Federal government also may use another monetary policy to further address the slowdown of the economy. Here are some recommendations made up of quantitative and qualitative monetary policy to achieve the same goal with a slightly different approach. First are interest rate. Interest rate is a quantitative monetary policy that refers to the act of central bank to persuade commercial banks to increase or decrease their interest rate onto consumer deposit and loan. To address the current situation, Bank Negara Malaysia will have to persuade the commercial bank to reduce their interest rate on consumer deposit and loan. This will increase consumer demands onto loans provided by the commercial banks, as well as reducing their likeliness to deposit funds into the saving account or fixed deposit account due to the lower capital gain. This will inject additional funds into the market that will increase consumer purchasing activities that ultimately would improve the economic condition. Second are moral suasion. Moral suasion is a qualitative monetary policy that refers to the act of central bank to use persuasive tactics in public or private to encourage or discourage application of loans and depository of savings. To address the situation, Bank Negara Malaysia shall persuade commercial banks to ease lending policies toward consumer. This will lower loan approval requirement towards consumer, thus granting them access to more funds. Ultimately, this will increase purchasing activities in the economy. Third are special directive. Special directive is a qualitative monetary policy that refers to the act of the central bank to set up a special directive toward the bank system it governs. To address the current situation, Bank Negara Malaysia may instruct commercial banks to increase the volume of loan toward consumer in the effort to increase the money supply in the economy. This to encourage purchasing activities that will ultimately contribute towards the progression of the economy.
In conclusion, with these current pandemic issues that hit our country, it also affects our country revenue because it is not rising as fast as the increase in the expenses. The fund for COVID-19 stimulus and recovery plan that require 55 billion and this project fiscal deficits of 84.4 million for budget 2021. In addition, the amount is expected to rise even further to 39 billion for 2021. Before the COVID-19 hit, Malaysia still can keep the debt below 15% revenue, and due to this country, debt is rising up. Therefore, if growing political tensions and diverging views within the government undermine policy effectiveness or impair the government ability to comply with its fiscal consolidations goals or threaten the stability of capital flows to the nations, downwards rating pressures may also emerge. The government debt need to be allocated to efficient investment that ultimately lead to sustainable short and long-term sustainable spending growth in economic terms. Government debt should therefore not become a burden of obligation for further generation living in an economy in which the capacity to repay is surpassed by a significant amounts of debt.
That's all from us. Thank you.